Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. I love my team. Anyways, today we're Thursday, April 16, 2015. Today, folks, we have markets that are having a correction. The question bar is open. If ever you have any question as well, don't hesitate to ask them. The strategy for swing trading today remains a strategy where you should continue to hold on to the positions you have acquired yesterday, especially the ones where you have already taken some profit. For instance, if we take a look at the situation on the Nasdaq here, we are actually in a situation where we have tested that top and we're stabilizing. Same thing too on the Dow Jones and as well on the TSX. Now, if we make a follow-up on yesterday's sectors that led the rally. First of all, the industrial sector. And in the industrial sector, what we have a correction. Lennox International, Trinity Industries, Fluor, and Eaton Corp. So all those stocks are having a correction, but you see all of them are still maintaining their upward trend. Now, concerning the energy sector. Energy sector, though, we have oil that's slightly resuming its bullish momentum, but still remains flat. And we have the energy sector that is having a slight correction. Concerning the energy sector, we just put it into a neutral cycle. So if we take a look at the sector, though, stocks like Whitecap Resources that rose yesterday are all having a correction, but it's still okay. There's no need to panic. Trinidad Drilling also have a slight correction, but resume it slightly. So it's still maintained its upward trend, and Pembina Pipeline as well. So the strategy where the theory where I said that the trend is your friend remains valid, though, even if we have a slight correction on the market. And it was, I'm not saying it was expected, but when a sector has been so strong for the last few days, especially in the resources sector, and the fundamental reasons have not changed on that sector, well, it's normal that a lot of investors are taking some profit after the strong rally. So it was important to do so yesterday to take some profit on some of your positions. Concerning the news, we had, first of all, a news where S&P has downgraded Greece. This has created at opening, only at opening, some slight bullish momentum among gold, but it lost all its upward momentum. So gold remains flat, same thing as the gold sector. I know yesterday I told you it was a sector to be watched, to be monitored, but this sector is not confirming at all any cycle, neither on the upside, neither on the downside. It remains neutral. However, yesterday on marketgurus.tv, that you can have access for free for 10 days, even if the sector was not in a bullish cycle, we were starting to see some breakouts. So we were betting that if ever the sector could pursue its rally, there might be some stocks that might pay off. And this is why we did recommend that stock among our analyst shares portfolio yesterday on marketgurus.tv, which is Dator Gold. It's having a correction today, but it's okay. We're holding on to that positions. As long as it remains above 1132, which will correspond to the reversal of this upward trend, there's no need to panic on Dator Gold. Today, though, those of you who were watching bullish ETFs such as Nugget, such as HGU, I think that on those bullish ETF, well, you still have to watch them because the sector is still neutral. And so far, as long as there's new cycle that's confirmed, there's no need to close any position on the gold sector, and neither to open anyone on the gold sector. The mining sector remains also one of the weakest sector, which is having a correction today. And we have actually in the US a clear bearish momentum among utility stocks, where a lot of stocks are actually breaking down, such as CMS Energy. Wisconsin Energy could break down below $47, Xcel Energy below $34, Pinnacle West below $62, American Electric below $55. So utility stocks are weak. Energy stocks on the Canadian side are having a correction. The gold sector remains neutral. So far, there's no cycle at all on the gold sector. And concerning the industrial sector that led the rally yesterday, we have a correction. In terms of the earnings seasons, great earnings. Goldman Sachs, Philip Morris, Citigroup, all of them, they beat estimates, but this was not enough to allow the markets to maintain its rally. So you have Jerry here. 80. So Jerry, you have a questions. You bought 80. The only one I have 80, it's the Atlantic Power on the US, but I know there's Atlantic Power on the Canadian side as well, but it's not trading 12 cents, 17 cents. So this is not a correct question, Jerry, because I don't have the right ticker. So please specify the ticker here for that one. Now, Isabel, do you think HGD is good again for a hold, or should I sell? Well, HGD, Isabel, it's in a situation where you should continue to hold on to it, right? If I remember right, I remember that I said that, I think it was around this area, I said that you could start to buy that positions on HGD. As long as HGD stays above 1070, there's no 1050, there's no need to close that positions on HGD. It's still an ETF you have to hold on to. Gold remains within its sideways formation. There's still the Greece tension that is there, because Greece, so far, there's no agreement. So this is something that if ever the Greek defaults, well, we might see possibly a bullish cycle on the gold sector and among gold stocks. But right now, there's nothing concerning that. There's nothing that's official. So for HGD, I think as long as gold remains within its sideways formation, there's no need to close or sell that positions. I think you can hold on to it and hold on to HGD as long as it remains above this support, which is at 1070, 1050. So stay technical on HGD. I think that's the best advice I could give you on that positions. Now for HVU, Marco, well, HVU, I don't think it's wise to get into HVU right now, Marco, because simply we still have good earnings coming out of those blue chips. Why should investors be worried right now? I think the only thing that could make investors worry is if ever the Fed magically decides to raise the interest rate. So for me, investors are, even if markets are neutral, we have a slight correction. This correction is still too weak to recommend to open some positions on HVU. We're still neutral on the markets, so there's no need at all to open some positions on HVU because we don't see investors rushing to protect themselves. And it's a signal where I think you should not open some positions on HVU. I think HVU will only be interesting if I see the SPY, for instance, the SPY, that could at least, let's say, start to reverse that short-term upward trend. If it could go below maybe 207.50, that could be interesting. And 207.50 will be where there will be all this 50-day, 10-day, 30-day moving average. So if the SPY doesn't go below 207.5, for me, there's no need to buy HVU so far because we don't see it in the market. Investors are more bullish or neutral than bearish. Now, Chris, hi Chris, I bought PLT.U. Okay, PLT.U. PLT. T.U. Man, I can't find the ticker. Buff.
I see PLT.UN.
Ah, PLT.UN. Ah, okay. Is it a bottom? Should it be on my watch list, especially if the energy sector breaks its resistance? Much appreciated. Man. You know what, Paul? Like, by looking at how the energy sector has performed, I don't know why you want to buy a stock like PLT.UN, because it has been totally at the opposite of the energy sector rally. So a stock since 2014 that has kept its decline, right? I cannot say it's a bottom on a stock like that. Even the rally among energy stocks has not allowed this stock to pick up. So for me, it's not even a stock I will put on my watch list. A thing I'd like to see and what I favored is that if you want to buy some stocks, even if they're at a cheap price, is to favor stocks that at least can move with the sector movement. So we had a rally for the last few days in the energy sector, but that stock has not reacted at all. So for me, there's a bigger problem on that stock, fundamentally speaking. And for those reasons, PLT.UN, I will take it out of my watch list and not even look at it because it has not participated at all in the last rally of the energy sector.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
Welcome back. We have one question from Dave. So Dave asked me, what do you think of AVL Toronto? Thanks. Well, Dave, I have to say that at opening, though, I loved AVL because the rare earth sector, we had Molycorp that was so strong at opening, but lost its momentum. So that stock rally at opening led the increase in AVL. For me, if you're buying a stock like AVL, you are trend trading, which means that you buy AVL today at 37 cents, right? The stock is making a positive bottom with the stochastic, which is something that's good. 10-day above the 30-day moving average, which is also something that's good. But on a stock like that, if you're trend trading, you have to be disciplined. What I mean by that is that if you buy today at 37 cents, whenever you make a 5, 6, or 7%, quickly take some profit. As an exit point, limit yourself to, let's say, this short-term upward trend. So I would say if the stock goes below 35, 34 cents, that might be a point where you might want to reduce or close that positions totally instead of waiting until 30 cents, which corresponds to that a medium term upward trend there, because from 37 to 30 cents, that's a bigger loss potential, and you don't want that on a stock like that. So yes, AVL is one of my favorite on the rare earth sector. I love that stock, but as I said, 5 or 6% of that stock, take some profit, and 35 cents, 34, I think that will be the perfect point where you should close out positions. 35, 34, it still gives you a 6% loss potential, but you have a probability to make a 10% around 41 cents. So the risk reward, 7% loss, 6 to 7% loss potential for a 10% gain potential at 41 cents is attractive, but you have to be disciplined in that by putting your exit point and your profit taking opportunity on a stock like AVL. So that's my advice on this. Now, is it time to get some shares of ZPR? I don't know ZPR. I've laddered. So laddered, it's so if I remember ladder, yeah, okay. So a laddered position, it's a position is where this ETF trades bonds, and a ladder position, so it's like a ladder, right? You know what a ladder is? And on a ladder, they actually put equal amount of bonds with different maturities, bonds on the short term and the medium term and the long term. So for the fact that it's going down, I don't know how it's weighted, if there's more bonds with longer term maturities or more bonds with shorter term maturities. I think the recent decline that we're seeing right now on this position, ZPR, is a sign that the short term bonds, the short term rates actually going up impressively, and that ETF has a bigger weight in short term bonds. Because you know, when rates go up, bonds go down. And the fact that utility stocks are also going down today is a signal that the short-term rates are moving up. So based on that, I think that ZPR is actually not an ETF you could track, you could buy right now. I think you should see also how interest rates are going to move. And by looking at that, I think that the fact that short-term rates have been going up slightly in the last few days is also one of the reasons why ZPR has took a hit. But for me, ZPR, I think I would not advise you to get into it, because we don't follow bonds that much. We don't follow rates that much. And that would be unwise of myself and unprofessional to say getting into a stock like that, because fundamentally speaking, I have nothing to say concerning a stock like that. I'm just not speculating, but I just have an opinion based on what I know in terms of the laddered strategy for bonds. But technically speaking, if the ETF doesn't go above 1233, there's no reason to get into an ETF like that. So that would be my advice on ZPR. Now, please analyze the Canadian dollar. Well, the Canadian dollar is strong today. It pursues its rally. We know the Central Bank of Canada yesterday kept its monetary policies intact. Canadian dollar is rising with oil. So the thing is, I think the Canadian dollar, his score is positively correlated to oil. So the thing is, if ever the fundamental factors for oil do change positively, we definitely might see the pursuit of the rally on the Canadian dollar. So are we at a point where we might have a pause on oil? Yes, we are, because this is an important downward trend. This corresponds also to a former top that we tested here on 2015. So yes, there's a possibility that at 2016 we might stabilize. So that means that the Canadian dollar rally might also stop around that point, which is around $82 for the Canadian dollar, which is FXC. So concerning me, I think the Canadian dollar is in a nice situation, but the strength of the rally will be determined by how supply and demand for oil changes. If there's more demand, the European economies continues to grow. That is something that's going to be positive for the demand for oil, and we might see a pursuit of the rally on the Canadian dollar. But so far, the Q has just started, folks. So we need to see the Q impacts in the next few quarters. And maybe it's going to take a while, though, for the Canadian dollar to actually pursue its rally, because so far oil outlook has not changed that much. There are no picks I'm going to show you today in terms for swing trading, because by looking at the markets today, we all have a correction, and there are no new breakouts or breakdown in the markets that we find that are interesting. However, for day trading, there's been that stock on NASDAQ that has been recommended on marketgurus.tv. I think it was recommended around 1030 if I remember right. So you got an entry point here, another one there, another one here, and also another one there. So you have all those entry points that you had on CNAT for NASDAQ. So for swing trading, folks, look, there's a lot of congestion there on CNAT. So I'll pass by for swing trading. But for day trading, why not give it? It was definitely a great opportunity to get in. So overall, folks, if you have one word for a strategy, one word to describe the strategy of the day is hold on your positions that you acquired, especially the ones you took some profit on. Gold remains neutral, no entry point yet. So if you have HGD, which is a bearish ETF, or HGU, which is a bullish ETF, there's no reason to sell those bullish or bearish ETF, but rather hold on to them. So see you tomorrow on the Swing Trading Show on DecisionPlus.com.